Hello, good morning, happy Wednesday. I hope everybody's having a good day. My name is Diana De Leon. I'm a loan officer with Cross Country Mortgage, and welcome to the Partnership Realty classes. Today we have a special guest, my co-worker and colleague Sergio Loreto. He's the expert on non-QM loans. Today we're going to talk about non-QM loans. This is a very hot topic right now in the market that we are right now, especially for investors. So take note, have your pen and paper, because this is a very important topic and a lot of information for you to start making a lot of money in this investment market right now. Sergio, welcome to the class.
Thank you, Diana. So Sergio, I've been to this office here a few times pre-COVID, and I'm coming back. I do business with some of your realtors here, about 3 or 4 people, and the past 4 years I specialize myself in those non-QM, people who cannot qualify for the conventional mortgage. So we're gonna go through 4 programs today and tell you which kind of clients would qualify for these programs, okay? Let's start what's a non-QM loan. A non-QM loan is called qualified mortgage, right? A non-QM loan is a loan that for clients who cannot qualify for a conventional, a FHA, or a VA loan, right? What is the reasons they would not qualify for that? Well, most of the times it's credit. The guy has bad credit, cannot qualify for that. As you know, an FHA loan is 580 and above. A conventional is 620 and above. I'm talking about FICO, okay? Second question, reason, doesn't have the income. A lot of people are self-employed, okay? There's a lot of people are self-employed. Whatever money they make, they don't put it on a tax return. I'm not here to judge. It's up to them, right? So they cannot qualify for conventional and FHA because they don't prove enough income on the tax return. And if you're self-employed, you need 2 years of tax return. If you're W-2, it's fine, okay? Because, your money is deducted already. So that's another 2 reasons that, other reason, they don't have the documentation we need. Sometimes people are here, they only have an IT number. You guys know what IT number, right? Instead of Social Security, they have an IT number. That's another reason. What if they are foreign investors? They come here to the United States on a touristic visa. They cannot buy a conventional loan. So we're gonna cover all those situations today of why a customer cannot qualify for a loan and which programs we can put them in. There's I would say that out of 100% of the mortgages in the United States, check this out, 20% or more is non-QM. So if you see how much money is sold here in South Florida, there's a big part of the pie that you're missing the business because you do not have the program. Today we're gonna teach you ways for the clients to get in this program. It's just a way for them to get the house first. Even though those interest rates are a little higher and the money down is a little more, it's still better than renting. All the programs, even at the highest interest rate, you would be surprised that the value of the mortgage is going to be less than the rental. And you know how the Florida market is crazy? It's going up, what, 10, 12, 15% a year, which means if you buy a house, it's $300,000. Next year, it's $330,000. The year after that, it's almost $400,000. It's a crazy market. I don't see this market going down. Why? Everybody wants to move in Florida because it's warm. It's the only state in the whole United States which is subtropical, right? So everybody wants to move here, not only from the United States, but Canada and South America and Europe, China. Everybody's moving to Florida because of nice weather. So let's go to those 4 programs that can qualify your clients who cannot be qualified for a conventional loan, okay? All righty. Okay, let's talk about the first one. The first one is the bank statement program. As I said, you can qualify either with the banks, the tax returns, the W-2. If you don't have those 2, we can qualify you based on the deposits you make on your bank account. Let's say someone has, I don't know, he cleans houses, right? Has a cleaning company, makes a lot of cash. Doesn't declare money on IRS, right? But every month he's putting $7,000, $8,000 in deposit on his account. It could be the business account, could be the personal account. For me, it doesn't matter. I'm going to take 12 months of pay stubs of bank deposits. I'm going to put it in a spreadsheet, and I'm going to see how much deposits they make. Let's see that's $10,000 a month. In 12 months is $120,000, right? Out of this $120,000, it's going to say Sergio. Out of this $120,000, 20% is expenses, 80% is profit. Okay? So I take this $80,000 divided by 12, that's his income. So the income is derived by the deposits on the bank account. Here's the good thing. This bank statement program works for people who are here legally, right? They might have a green card, an employment authorization, or American citizens, right? But it also works for people that have IT number. That's the only bank that we do in the whole United States that finance people who only have an IT number, okay? So what they would need to qualify for this program, they would need those 12 months of bank statements with enough income, because if they save the money on in the mattress, that's not going to work. They have to deposit the money. Could be in the personal, could be in the business, right? So they need this. They're going to need a credit score, because this program also requires a credit score, okay? If you see here, the minimum credit score is 80, okay, with 30%. Or is above 700, you can go as low as 10% down. Just for you to have an idea, an FHA loan is 3.5% down. A conventional is 3% down. If you don't have the documentation necessary to approve one of those programs, you can go with 10% down. It's not much of a difference. And it's not that you're spending this money. You're putting this money from your bank account to the house. And the house is increasing about 15% a year. So 10% down if you have a credit score above 700. For those people who have IT, they have to have a credit score as well, because an IT number builds credit score the same way Social Security builds a credit score, okay? And you have to keep using. So you need 12 months bank statement, business or personal. You need a credit score, whether it's in your Social Security or your IT, okay? Usually the banks, if you provide 24 months bank statement, you get a rate a little better. Because if you provide 24 months of bank statements, you show the bank more stability of income, okay? It's not necessary, just in case you're looking for a better interest rate, okay? Another thing, finally, this program is for primary residences only. The bank statement program is not for investment, okay? You have to buy and you have to stay in the house. So that's the bank statement program. I do a lot of those. It's a valid program, because down the line, we can refinance your client into a conventional. Let's say the guy gets into a bank statement program and is paying 7% interest rate, right? As I told you, even at a 7% interest rate, the mortgage is going to be less than the rent. 1 year down the line, I said, hey, Sergio, I want to refinance this into a conventional. I tell him, listen, all you have to do is to do this tax return here for this amount, and I can refinance you into a conventional. So as just a way for your clients to get into the house, right? It's not a dead end. They can get out of this and go to a conventional loan. All right? So this is the bank statement program. Let's go to the next one. Okay, this one is the DSCR loan, okay? It's called Debt Service Coverage Ratio. This program is for investors, okay? You want to buy a house as an investment. The good thing about this program is the following. You only have to show two things. In reality, three things. One, you have to show that you have a credit score. The better your credit score, the better interest rate you can get. The second one is, on this program, you need 30% down. Minimum is 20% down. See, the credit score on this program, if you're above 680, it's 20%. But if you're below 679, it's 30%. So it's either 20% or 30%. So the things that you need to qualify for this program, one, a credit score. The better the credit score, the better interest rate you can get. Okay? the money down. You have to show that you have the money down. All right? This money has to be in your bank account for at least for 60 days. Okay? Could be in a foreign account as long as when you transfer this money for whatever country it is to here is done legally. And I can prove that's leaving that account there and coming to this one. Okay? So, and most important, the qualification that after you give 20 or 30% down, the value of the mortgage is lower than the rental. When you usually give 10%, 30% down, almost 100% of the time, the property is going to rent more than the mortgage is going to be, even at those interest rates that I told you. This program goes from 6 all the way to 8% interest rate. You probably can go as low as 4.5 and 5. What dictates the interest rate is how much you put down and your credit score. The more you put down, the better your credit score, the better your interest rates. Okay? If you put only 10% down, your interest rate's going to be, I know, in the 6s and the 7s. But if you put 50% down and your credit score is over 780, the interest rate's going to be lower. So let's review the the SCR. Those are for investors, right? I don't care about the tax return. I don't care how much liability they have. Let's say a client, has an okay credit score, but when I put the credit report, the guy has $100,000 in debt. It's going to destroy the DTI, right? The debt to income ratio of the conventional loan. On this program, we don't care about the DTI. We only care, 1, you have the credit score. 2, do you have the money to put down? 3, will the mortgage be lower than the value of the rental? Okay? Once the client buys a house, he's going to have to pay for appraisal, like every other appraisal. However, on this appraisal, we're going to have 2 appraisals. We're going to have appraisal for how much this house is really worth it, and an appraisal of how much this house rents for. This appraisal for the rent is the one that's going to dictate how much the rent we're going to use. You see? Let's say it's a $300,000 home. Let's say after you put in 30% down, the mortgage is going to be, I don't know, $2,000. So you know that the appraisal, the rental appraisal is going to have to come higher than $2,000. Okay? If it comes to $2,100, you're good. Because remember, what do you need? You need the money down, you need the credit score, and you need to make sure that after the amount you give down, the rental is more than the mortgage. This is the STR program. You have a question, right? Sure.
Yes, it's like if the investor comes to me and say, if I get this DSCR, I'm going to have a penalty.
You talk about the prepayment penalty.
It's like if they want to do a flip.
Okay. This program.
This money and they say to me, Fabiola, I want to have this money to keep for 2 or 3 months and they do the flip. They're going to have a penalty here or no?
Yes. This program is better for you to hold the property as a rental. However, you can get out. On this program, they usually have a 3 years prepayment penalty.
3 years.
3 years. They have, but the thing is, you can buy down this prepayment penalty. Okay? The original program is a 3 years prepayment penalty. You can have a 2 years prepayment penalty. You can have a 1 year prepayment penalty, or you can have 0 prepayment penalty. But what's going to happen? They're going to charge you a point, 2 points, 3 points. So it depends on the situation of the client. I'm going to sit down with your client. I'm going to see if it makes sense. The guy is going to say, listen, I want to get out of this loan in 6 months, right? I would tell him, listen, it's going to cost you 3% of the value of the loan to buy out this prepayment penalty. If the house is $300,000, the financed amount is $300,000, and the prepayment penalty is 3 points equals 3 is $9,000. 3 times 300 is 9,000, right? So if the guy is going to make a bundle, he's going to make $100,000, $120,000. Doesn't matter if it's paying $9,000 to buy out the prepayment penalty. Each case is a case. But
Sergio,
this is better if he's going to keep the property.
Sorry to interrupt. I just want her to repeat the question.
Sure.
So I can put it in the microphone so they can hear in the house. Can you repeat the question?
Sure. My question for you, I say if the investor comes to me and asks if I'm going to have a penalty on this loan.
All right, so I replied to that already.
Yes.
You just want to
Yeah.
record it. Any more questions on the DSCR program? Cool? Let's move to the next one. The next one is the foreign national, right? We live in Florida. I think what, more than half of the population is not in the United States. I'm not. Gianna is not. Probably most of you are not, right? You're not born here. But we live here. And like us, there's a whole bunch of people moving to South Florida and to Florida in general. Why? Because of the reasons I told you. It's summer, right? All the time. It's nice. You can be in your shorts, barbecue year round. Try to do that in Minnesota. You can't, right? It's close to South America. The Chinese are buying half of the state of Florida. The Russians too. The Europeans too. The Canadians already do. They've been living here for a long time, right? So everybody wants to live, especially here in South Florida. And what happened in South Florida? We have only 13 miles of real estate. We have the Everglades on one side. We have the Atlantic Ocean on the other side, right? How many miles? 13 miles. There's no more land. They're not making more land. That's it. So that's why it's getting harder and harder and the prices are going up, because we have a limited amount of space here in South Florida. So foreign nationals are buying this place a lot. What is the reason they buy this place a lot here in South Florida? Two reasons specifically. One is, they're wealthy, they have money, it's safer here, right? I'm talking about Latin America, maybe Russia, whatever. It's safe, it's the United States, and it's a paradise, right? So they want to buy just because they want to live with their family here 6 months out of the year. But a lot of times they're buying the property to put an Airbnb. Florida is a major cash cow for Airbnb, right? Especially Orlando and South Florida. In Airbnb, you probably can triple the amount of money on a mortgage. If your mortgage is $2,000, you can Airbnb $6,000. You can triple. So based on my experience, a lot of people, most of the people buying properties here, they may stay 1 or 2 months the other year. The other time, they put an Airbnb, okay, which is worth it. Or you can rent the property out. The foreign nationals, they're people who have a visa to come to the United States, but they're not residents, right? What kind of documentation you need for a foreign national? First of all, you need 30% down. Foreign national is a very easy program. They need 30% down, okay? The interest rate is around this, 6-7%. That's the interest rate. You can go as low as 4.5%, depending on that thing I told you, how much you're gonna put down. I don't need a credit score for this naturally because the person doesn't live here, so there's no credit score needed. The only thing we need is to show that you have the money to put down, okay? I'm gonna need a copy of American passport, or the whatever country you are from passport, the visa to come in the United States, because you have to come over here to stay in the property and to close, right? I also gonna need a CPA letter, a letter from his accountant, okay? The CPA letter is gonna be easy. I send usually to the client, right? CPA name, state that Mr. John Smith made this much in 2019, this much in 2020, and from January to April, this much. It's a simple letter stating how much the income is. Most of these people who buy houses here, they have businesses in that country, right? So they're gonna ask the accountant to write this letter. So, and they need also a utility bill to prove that they have a house, whatever country they come from. So look how easy this is. We need 30% down. We need the copy of the passport where they live, the page which has the visa to get into the United States, okay? A CPA letter, a letter from the from the accountant, a proof of residency there, like a utility bill, and they need to have a U.S. account. They don't have to have right away. They can come over here 1 week before, open the U.S. bank account, because the money is gonna be withdrawn automatically every month, right? It's automatic withdrawal. But they can have this 1 week before they come here. Other important thing on this program, once the money comes from whatever country they come to here to close, it has to be done legally. It cannot be done shady. The money has all to be traced. What happened? A lot of people want to buy property here. I don't know, they might be a drug dealer, right? And they want to buy cash because real estate is a good way to clean your money. No. We have to prove that the money is there in the account whatever. Let's say the guy comes from Chile. The money leaves Chile and comes to the US account. You have to show a proof that the money left there. First of all, we have to show that that money was sitting there for two months. And then he's going to wire transfer to his account. We're going to show the money leaving there and the money arriving here. This is a very important question because I have a lot of people, my money. Now, this is non-negotiable. The money has to be clean and the money has to be sourced.
Sergio, I have a question. What is the estimated closing cost, more or less, on a...
All these programs that I talked so far, the closing cost is between 5 and 6%.
Estimated.
It's hard to me to say exactly 5 to 6 because listen, $100,000 home, of course, is going to be more than 5% because it's a $100,000 home. But $1 million home certainly is not going to be 5%. How much is 5% of $1 million? $50,000. It's not going to be $50,000. If the house falls anywhere between 180 and 300, this number works, 5 to 6%. Okay? That's the one.
Thank you.
By the way, this is the same closing cost for the bank statement program that we talked so far,
Yes.
and the DSCR. Okay, the closing costs around 5 and 6%. So this is the Foreign National Program. Do you guys have any questions on the Foreign National Program?
Look like the closing cost is very high.
Let me put you the microphone.
Yeah.
Okay, let's talk about. Repeat it again, the mic so they know.
So look like the 5% and 6% closing cost is very high.
Okay, let's consider that on a conventional loan of FHA is 3% closing cost. It is. So you're paying only 2% more in closing costs. But what are you not paying? IRS, man. I don't care about your tax return, right? Imagine if for you to buy a property, a $300,000 home, you have to declare $80,000 net on your tax return. Okay, a $300,000 home, let's say if your business, you have to have $80,000 net. How much are you going to pay in tax on a tax return of $80,000 net? At least 25%. So you're going to pay $16,000 in tax. And you complain about the 2% extra you're going to pay in the closing costs. Everything is math. Math doesn't lie.
Yeah.
It makes sense for you to, oh no, I don't want to do a tax return. I'm okay to pay. So this is an easy sell for your client. Right away he's going to say, I'm just paying 5% as opposed to 3% and I don't have to make a tax return. I'm in. That's easy. I can counter this like this. Because there's no other option. Is it this, or is it that, or you buy cash? Nobody wants to buy cash, even at this interest rate, at 6%. All right? Try to go to your bank and ask for a personal loan. Go on the internet, personal loan. What's the interest rate?
9.
9, 10, 12,
10.
13, right?
9.99 to 11.
Yeah, and you're getting at 6. For me, it's a deal, right? All right, so that's the Foreign National, right? Let's go to the next one here. That's the final. Go ahead, back in the Foreign National.
Give me 1 second.
The CPA letter needs to be for a U.S. Accounting or can
No,
be for the
no. Here's the thing: the CPA letter,
for
whatever
country.
country he's from, he's gonna be sending me a CPA letter on that language: Spanish, Russian, Chinese.
Okay.
Once I receive the letter here, we're gonna have to translate this to English. You know, I have some translation companies that I work with, mostly Portuguese and Spanish. But you know, if it's Chinese, we find someone who translates the letter in Chinese. Also, the bank statement programs from the other country have to be translated. Any document that's not in English has to be translated into English. It costs usually $15 per page for translation. One letter, $15 is nothing. The bank statement might cost a little more. If it has 10 pages, $150. Okay, but all the documents that do not come in English have to be translated into English. All right?
Question. Is the person that has an own business, for example, has a clinic, how it shows that his income is legal?
You're talking about the bank statement program back in the bank statement because it's not...
Foreign national.
Listen, in the Foreign National, you talk about a person who does not live here, right?
No.
And has a job there. All he has to do is call his CPA, his accountant, and say, listen, I need a letter saying this, this, and this. We're not going to check. We're not going to check. It's just a letter. This is just a technicality, okay? Whether he has a company or doesn't have a company, it doesn't matter. Because, you know, he's putting 30% down. What's what's the chance he's gonna default on a loan that is putting 30% down? On a $300,000 is 90,000. You think he's gonna pay? Oh yeah, he's gonna pay. He's not gonna lose his $90,000. Not in this hot market here. So don't worry about that. And the customer, the foreign national, sometimes he works for a company, right? It's okay as long as he makes good money. I got a letter from the HR department from that company saying, listen, Mr. Joe Smith worked here as an engineer and makes this, this, and this on the past 3 years. Easy. So either CPA letter or an HR manager letter. Simple. Don't worry about this. This is the easy part. On the foreign national, the letter is the easiest part. The part I'm mostly more concerned is having the money transferred from the country to this country here, which is a lot of shenanigans.
Yeah.
Right?
I have one question.
Sure.
Yeah.
So if some international people want to buy the property to United States, but he doesn't have the visa, like any kind of visa, but he have money and he interested to buy the property.
Here's the situation. It's possible for this loan to be closed on a U.S. embassy of the country of origin, right? But if he doesn't have a visa, how is he going to open an account here? There are few banks that do that. I don't know them anymore. It's kind of a little shady business. If he has a way to open a business account here, a bank account here, and doesn't want to close here, he can close on the U.S. embassy closest to his house. Takes a little longer because now you have to call the embassy, right? So listen, I'm going to do a property closing. It has to be set up from here. The title company has set up with the embassy a time that can be closed. It's possible, yes. It gets more complicated, yes.
But
it can be done.
He can able to buy it, right?
He can buy, yeah. He can buy. It gets a little more complicated. I've done a few of those. Takes a little more timing. And what happened? When it takes more timing, on this hot market, the seller is not going to like it. Yeah, because, you know, everybody wants to close cash, right? In this hot market, now you're saying that it's going to take 60 days. So it can be done if the seller gives them time to do. We're not talking about 30 days. The thing about closing, those loans that I talk about so far, because they're not governed by FHA rules, conventional rules, they are non-QM, they take a little longer to close, right? Usually 30 to 40 days to close. It's very hard for me to close this kind of loans, the 3 that I talked so far, in less than 45 days. Because what? It's a lot of things to do, right? It's more risk for the bank. Why is the interest rates a little higher? Because there's more risk to the bank, right? The bank only cares about one thing. Are you going to pay this loan in time? That's the only problem the bank has, right? And now a guy doesn't have a tax return or don't have the right documentation. It takes more time to fix it up.
Sergio, I got a question from our Facebook friends. They're asking, the letter will be for the last year?
The letter would be for the last 2 years plus year to date. So in this case now, he would need the letter saying that he made this much in 2019, this much in 2020, and from January to April, this much.
Okay, thank you.
One thing, it cannot be declining income. It has to be inclining. Because why? If it shows declining income, this guy is risky. He's losing money, right? Yeah. So I don't know. He makes $100,000 in 2019, made $120,000 in 2020, and so far he made 30. It looks good.
Right.
A little bit going up, not going down. At least the same.
And
Cannot
that's for
go
every
down.
loan.
Yeah, like every loan, you know.
We don't
Risk.
wanna
Everything's
decline.
about risk. The bank doesn't like risk. That's why banks are rich, because they avoid avoid risk, right?
Exactly.
All right.
And the harmony loan.
Okay, so we're gonna go to the last one. So these guys don't have anything. I say, this guy is nothing. He doesn't qualify for bank statement, doesn't qualify for foreign national, doesn't qualify for the DSCR, and there's the last option here. The one I offered the last. Why? It's called hard money loan. You know why it's called hard money loan? Because the terms are hard. They're not easy, right? Hard money loan, you're gonna need 25%. Nobody qualifies. Doesn't matter if you're legal, illegal, doesn't matter. Following. I don't care about credit score. You don't need to have a credit score. You don't even have to have a credit. I don't care how in credit cards. I just care about this. Do you have the 25% down? Yes. Can I prove the money is legal? It's been sitting in your bank account for 2 months? Yes. Okay? That's it. However, you have to prove income because you have to show the ability to pay the loan. Okay, so you need 25% down. You need to make sure the money is legal, and you have to make sure that you can pay this loan. Let's say the loan is going to cost you $2,000 a month, right? You can either be an employee that shows that you make like $3,000 or $4,000, or you have a company, and I show 12 months of bank statement showing that you make at least double that, right? $4,000 a month. So easy, hard money loan is very easy. Needs very little to qualify, but the terms are hard. It's 12% interest rate. Closing costs 7%. However, I close in 10 days. Okay? Who is gonna apply for a hard money loan? Mostly flippers. Fabiola, right? You said about people that do this kind of loans? Yeah. House that's $150,000. If you put $20,000 in this house, rehab it, you can for $300. Do you care if you're paying 2% interest rate or the closing cost is 7? I don't. I'm making a lot of money. So hard money loans are good if you have an opportunity that you cannot miss. I want to buy this house. I cannot qualify any other way. So I'm going to go for hard money loan. Okay? Or you want to find out. Be there for a little bit. You're going to refi. You can refi a hard money loan to a bank statement program or into a conventional loan. Believe it or not, even at 12%, you're going to rent. And I can prove it is. At 12% interest rate, you take a $1,000 home, the rent's going to be less than the mortgage, more than the mortgage. Amazing, right? Because why? The market's hot. What can I say? I don't make the rules. I just interpret the rules.
Yes.
Right? So this is a hard money loan. I told you, listen, the important thing of this hard money loan that I offer, it's 15 days to close, and there's no prepayment penalty. And it's 30 years fixed. It's very hard for few people to offer a hard money loan with no prepayment penalty because usually the prepayment penalty is like stiff, right? It's fixed. A little bit goes to the mortgage, a little bit goes to principal, and a little bit goes to interest. Most of the hard money loans are only interest only. Not this. Very little goes to principal because the interest rate's very high. But you do. So that's a good way to get into a property if you need to buy this property. Okay. So now you have it 4 methods that non-QM loan. Non-QM loans, they're gonna be included in one of those 4 things. Okay? Bank statement, DSCR, foreign national, and hard money. That's all I have to say. So if you guys have questions, we can go for it.
You know that you can always send an email to Sergio with any questions that you might have. What is your email, Sergio?
It's sergio.loreto@myccmortgage.com.
Okay.
I speak Portuguese, Spanish, and English. So in those 3 languages I can do. Some others I understand a little bit.
So it will be Sergio.
Sergio, I'm going to give you can you give me those cards to these people, please?
Yeah.
Thank you.
Yeah, but for our friends at home.
Yes.
Can
it's
you
Sergio.Loreto with 1 T at myccmortgage.com. My telephone is 561-654-5840. I've been doing this kind of loans for 4 years, so in the office, nobody knows more than I do on those loans. Because, they change all the time. They're easy. A lot of people don't want to do them. I do it because I see an opportunity to have a relationship with a realtor and a relationship with the client. He might not have a chance to buy this house conventionally, but if he follows my plan, I can get out of this thing and refi him into a conventional loan. So I can turn them 1 loan into 2 loans. That's good. Good for me, good for you. All right.
That's it.
Questions or no?
No question?
No more? I have one here.
Hold on. Microphone first.
For the one for the DSCR.
DSCR.
Yes, DSCR, not S.
Yes, DSCR.
Not S. My question is, since they're gonna put a 30% down payment, That's mean they're gonna avoid the mortgage insurance?
Good question. None of those programs have mortgage insurance. Even the bank statement program with 10% down does not have mortgage insurance. None of them. So there's another way for you to sell to the client. Listen, the interest rate's a little higher, but if you take out the mortgage insurance, it's not going to be much of a difference, right? Mortgage insurance, if you have bad credit on a conventional loan, can be pretty steep. $300,000 loan, $600 mortgage insurance, $600 on a bad credit. That's tough. That's tough pill to swallow. So no mortgage insurance, none of them.
Sergio,
Yes.
we have a realtor on Facebook that is asking if you can just do a little recap on the 4 loans and share your card.
On the 4 loans? Sure. The first loan that I talked to about was the bank statement program. The bank statement program, you prove your income with 12 months of bank statements. Okay, this loan you can have it if you have a social security, you're legal, or if you have an IT number. Okay, you need a credit score from 10% down to 20% down. Okay, that's a bank statement program, easy, right? Second one was DSCR. The DSCR loan is for investors. Okay, you want to buy a property, you don't want to show any income. Very easy. Put 30% down, 25 to 30% down, and make sure that the value of the rent is better than the mortgage, is higher than the mortgage. That's it, 30% down. We're gonna have an appraisal. The appraisal is gonna show the mortgage and the rent. The rent, certainly with 30% down, is gonna be more than the mortgage. So easy, right? You have a credit score too. You need a credit score. The higher the credit score, the better you can get. The third one that I talked to was the Foreign National. Another very easy loan, people who don't live here, right? I need 25 to 30% down. Interest rates in 4 to 6, right? Depending on how much you put down. I said 25% is the minimum. You can put more if you want to put 50% down, whatever, right? And you need a passport for the country you come from. You need a letter from your accountant saying how much you made the last 3 years. I usually send an example of this letter, easy. You need an account here in the United States, a bank account, because on this program, the money is going to be withdrawn automatically from the bank account. And most importantly, this 25% down, whatever, coming from your country to this country here, has to come legally. It cannot be cash carried on your luggage. Okay? Last program we talk is the hard money program. Let's say you cannot qualify for anything else and you have to buy a house. That's good for an opportunity you cannot miss, right? You find a house that's $150,000 that you have to put $20,000 in it, but you can sell for $300,000, right? It's a house that you just found. You don't have the money to buy it cash, right? You just have money for the rehab, right? Buying the hard money. Yes, harsher terms, 12% interest rate, 25% down, 7% closing cost. But I don't need anything. I don't need a credit score. I don't care if you have debt. I don't care about tax returns. I just need to make sure that you have the money and you can prove that you can pay the loan, right? Prove that you have income, 12 months bank statement. That's it.
What is the minimum loans for this program?
Another good question. All those programs, the minimum loan amount is $100,000. Loan amount. Okay? Well, good luck finding a house less than $100,000 here in South Florida, right? But $100,000 financed amount. So if you see that the property needs 25% down, it has to be at least $130,000 and above, right? So after you take down the money that you need to put down, $100,000 minimum financed amount.
And then we have a last question. It says, for a client for a flip that wants to do a flip, no penalty if they pay on less than 4 months?
Okay, remember the hard money loan that I told you? There's no prepayment penalty. Okay, so that money is fully amortized for 30 years of fix, and there's no prepayment penalty in the hard money loan. On the Foreign Nationals and the bank statements, they might have a prepayment penalty based on the bank that I use. Usually 1 year prepayment penalty. Okay? But you can buy out the prepayment penalty as well.
No more questions for
now. No more
now.
questions. All right, guys, so listen, I appreciate you taking time to attending this little seminar. You have my information on this video. I'm from Cross Country Mortgage. I work in the same office as Diana. Diana is always here. I'm gonna see if I can come here, like, in the mornings on Thursday to answer questions to everybody and see if we can do some business together. All right? Thank you very much.
Thank you, Sergio.
See you guys.
Bye.
Bye.